Hello and welcome to another FX Roundup with me, Joe Neighbour from Signal Centre. Yet again, another opportunity for me to share my charts with you from an FX perspective, also keeping you up to speed with the latest headlines and what's moving the FX world. So in terms of where we are at the moment, US bond yields continue to edge higher on Wednesday, with markets again fretting over the threat of higher inflation. Yesterday, the Federal Reserve Chairman Jerome Powell's comments were pretty much in line with last week's policy statement. There was a bit of risk appetite in some areas, but overall it's been a pretty dismal day for risk taking yesterday in particular, and looks to be pretty much the same case today as we are, although bounced back a little bit, certainly not recovering what was lost over the last few sessions. We've seen some pretty impressive moves in some of these currency markets, and it's having a real effect on the outlook for those. So just going to dive straight into the charts now. First up, we've got the weekly chart on the dollar index. I've been talking about this for what feels like weeks and months. If anybody's seen my videos previously, they would have seen that I've been going on about the same thing. And it's always nice, really, when things do start to go the way you've been predicting. And hopefully you guys have benefited from that. But this is the weekly chart. So prices had been trading within a big wedge for a number of months. This is going back to the highs of the dollar index that we saw at the height of the pandemic back in March last year. We saw prices continue to move lower before breaking out of this wedge to the upside, and then followed by quite a prolonged period of consolidation. Now, for me, what that's done is completed a double bottom on the charts. Now, that's quite a powerful reversal pattern when you're talking about technical analysis, and something that us as chartists are always looking out for. Double bottoms, head and shoulders tops. These are the big things that we want to look for an indication that there is a major change in the trend. So down here we've got these two green arrows which form the double bottoms. We've got the bottom here on the left and the bottom on the right. This was the neckline which came in at 93.43. That needed to be overcome for me on a closing basis to really confirm that. So we haven't done it yet because obviously we've got another trading day tomorrow, although it is also the start of a new month. So the candles on a weekly and a monthly formation will look slightly different, obviously, as they always do anyway. But we have seen a really impulsive move higher above this 93.43 level. There was also some minor resistance here from this minor high that we posted on the 16th of the week, beginning the 16th of August. We've overcome that, and we're pushing higher. We have run into a bit of resistance at the moment at the 38.2% Fibonacci retracement level of this entire move. That comes in at 94.47. If we can overcome that, then we're starting to look for higher prices up to the 50% and then the 61.8% fib level. Of course, there'll be some horizontal resistance levels as well to keep an eye out for on the way, but these are the major levels that I'm looking for, particularly on a retracement basis. The interesting thing for me on the dollar index is the measured move of this double bottom. So when we are looking at these patterns, whether it be reversal patterns, head and shoulders, double bottoms, we can often measure where the implied move will go to on the upside or the downside using pretty simple techniques. They don't always work, but they give us a pretty good indication of where price could potentially go over the short to medium term. So by taking a measurement from the low here on the 4th of January to the high here on the 29th of March, and then projecting that higher, that actually comes in at 97.66 up here, which pretty much lines up exactly with that 61.8% fib level at 97.72. So a really nice area of confluence for us to target on the upside as a resistance band, and potentially where to cut the trade or think about reassessing the view. So for me, more dollar strength is likely, and I think ultimately we could see prices up to 97.72 over the medium term with this. Now, obviously, when we see strength in the dollar, it has a knock-on impact on some of the major currencies that people like to trade, such as euro, dollar, and cable. So let's have a quick look at those charts. This is the weekly on euro US dollar. Again, anyone that's been watching these videos will know that I've been banging on about this being a head and shoulders top for some time. I haven't got it drawn on here, but what I'll do is quickly just refer to my daily chart. Sorry about the clustered drawings, but this is basically the head and shoulders I've been talking about. It was an upward sloping head and shoulders. As you can see here, we've got the left shoulder, head, right shoulder, cluster of levels in here where I was looking for a bit more finesse in terms of trading entries, but we've broken through this 116.64 level yesterday quite convincingly. We're not really doing an awful lot today. We're very flat on the session actually, so it looks for me as though we're going to be heading lower on this. Again, trying to measure where the impact of this is and where it could go, taking a measurement from the head down to the neckline, projecting it lower, comes in at 110.55 on euro US dollar. So looking for much lower prices. That kind of lines up with a 78.6% fib level from those March lows to those highs that we posted in January this year. So potentially a lot more downside on offer on euro US dollar. And for me, it is a case of selling into strength on this now. So I'll be looking to sell on anything up really to 117.00 in the short term, expecting lower prices. And I think from a risk reward perspective, that represents a pretty good entry level. So finally, just to wrap this up, because I don't want to keep going on, but I'm looking at cable. Again, I think we've got another double top here. So this is the top that we posted in February. This is the one that we posted in June. Double top there, one top there, one top there, and we've broken down. We were forming a bit of a triangle, a bit of a wedge, completely but obliterated that. No real support has been offered at around about 135.70, and we're heading lower. Really impulsive move down. No sign of the bulls trying to defend this. It looks as though prices are set for a move lower. So the measured move here of this double top comes in at 128.88, which is down here. And we've also got a 50% Fibonacci level as well to offer a bit of confluence really to this potential setup. So it looks like lower prices are going to be seen across the board against anything related to the US dollar. More US dollar strength, it's going to have an impact on pretty much everything currency wise, so careful if you're trading. But from a volatility perspective, and if you are a shorter term trader, volatility has increased, and that should therefore improve your opportunities when it comes to trading in these currency markets at the moment. Hopefully that's been useful. I'll be back next week with some more, and until then, trade safe everybody. Goodbye.